Hello everyone. Now we move on to the Financial Report 08 October with Melvin Cove. We hope you subscribe. Check if you've subscribed to the channel to help this project keep bringing you news. Melvin, what's not available today?
The situation is more serious than you think. In this video, we deliver a crucial analysis of what almost no one dares to say openly. Trump's economic policies are weakening the US dollar like never before, while gold is shattering historical records. Let's break down the numbers clearly. Then, before Trump, the dollar traded about 15% stronger against the euro. Now, 1 ounce of gold costs 43% more dollars than before, meaning the greenback has lost that much purchasing power. This is alarming, and almost no one is talking about it. So, what do these numbers really mean? In simple terms, the dollar is losing value against both major currencies and real gold. In this video, we explain why fiscal deficits, trade wars, and massive debt policies are taking a heavy toll on America's currency. We break down the shocking devaluation of the dollar from the Trump era to today, why gold has more than doubled in price, how past and current policies led us here, whether this trend is sustainable or a warning sign, what you can do to protect your savings. This isn't just another economic video, it's a necessary wake-up call. At Money Borders, we reveal the objective truth behind money, power, and policy. Are you ready for an uncomfortable reality? The hard facts. The dollar has weakened 14.5% versus the euro, and gold has soared 80% since Trump's presidency began. This isn't a random market event, it's the direct result of key economic decisions. 1. Massive tax cuts, 2017, boosted short-term growth but exploded U.S. debt and deficit. A heavily indebted nation loses global trust, weakening its currency. Trade wars, tariffs against China and others disrupted supply chains and fueled uncertainty. Investors fled to gold as a safe haven. 3. Pressure on the Federal Reserve. Trump pushed for ultra-low rates, flooding the system with cheap money that eroded the dollar's value. Today's reality, the bill has arrived. U.S. debt continues to climb, global confidence in the dollar is fading, and central banks, especially China's, are buying gold aggressively to reduce reliance on the greenback. Meanwhile, everyday people are losing purchasing power. The harsh truth. The math doesn't lie. Endless deficit spending plus global instability equals a weaker dollar and higher cost of living. This is not about politics, it's basic economics. Overspending always comes with consequences. So, diversify beyond the dollar. Keep part of your savings in other strong currencies, euros, Swiss francs. Gold is your insurance, not to get rich, but to protect your wealth. Invest in real assets, real estate, commodities, or companies with tangible value. Final thought. The era of blindly trusting the dollar is over. From Trump's policies to today's fiscal chaos, the data tells a clear story. Now it's time to educate yourself, stay alert, and take control of your financial future. Do you think these policies are to blame, or are there deeper factors? Join the debate in the comments below. France on the brink of political collapse. The country is facing one of the deepest crises in its modern history, following the resignation of Prime Minister Sébastien Lecornu, who stepped down just hours after taking office. His term is now the shortest in the history of the Fifth French Republic. Since the 2024 elections, France has been trapped in total political gridlock, a divided parliament with no clear majority, and a string of governments collapsing one after another. The situation has now reached a critical breaking point. Macron under fire. Even his former allies, including ex-Prime Minister Edouard Philippe, have urged him to resign and call early elections. But the president, with only 14% public approval, refuses to step down and vows to hold on until the end of his term. The cost of the crisis, credit rating agencies have sounded the alarm. France's country risk has surged to levels not seen in a decade, borrowing costs are rising, and markets fear a potential domino effect across the Eurozone. Political, economic, and social pressures are mounting by the hour. France is facing a perfect storm and time is running out for Macron. China urged World Trade Organization, WTO, members to unite against growing global trade turmoil and protect the multilateral trading system during a General Council meeting in Geneva. Beijing placed the issue on the agenda, calling for collective adherence to WTO rules amid rising unilateralism, particularly criticizing U.S. trade policies for disrupting global supply chains and coercing countries into bilateral deals that undermine multilateral norms. China's envoy Li Yongjie warned that a power-based trade approach is replacing the traditional rules-based system and proposed 3 steps: improve transparency and monitoring, reaffirm commitment to WTO principles, and take concrete measures to strengthen multilateral outcomes. Delegates from the EU, Brazil, Australia, and others supported China's stance, emphasizing the need to uphold the WTO's integrity. Several nations, including Venezuela, Cuba, and Nicaragua, condemned U.S. unilateral tariffs, while developing countries like Nigeria and Bangladesh urged more WTO support to offset the impact of global uncertainty. At a press conference, WTO Director General Ngozi Okonjo-Iweala acknowledged the stiff headwinds caused by U.S. actions, but noted that global trade remains resilient. The WTO also raised its forecast for global goods trade growth in 2025 to 2.4%, up from 0.9% previously.
Thank you, Melvin. Your report was very timely.